Well, Roland and I recently attended the Morningstar Fund Management Awards in Cape Town, where we got to mingle and source opinion from some of the sharpest minds in the business space, in the fund management space. And our crew asked them, what's the most important thing to remember when investing? Here's what some of the winners from the night had to say.
You've got to remember that you don't know everything. You've got to think about valuations, shut out the noise, and concentrate on what's important in the investment.
Yeah, I think like in any market, you always have opportunities, but opportunities bring with them a lot of risk. So I think as an investor, you need to give enough attention to the risk as well as the reward. But over and above all of that, like value will always be the most important thing. You need to buy an asset to the extent that it is adequately valued or giving you sufficient discount for the risks that comes with that. So in short, the two things that really count for us is the valuation of the asset class as well as the investment horizon of the strategy that we're following. To the extent that you've got the two things well aligned together, then you need to take advantage of the opportunity, and that's one of the reasons why we've done so well to date.
I think the most important thing about any long-term investment strategy is your discipline and the process that you apply with that. I know a lot of people think that stock picking is about scrounging the papers and kicking dustbins and finding ideas and then trading share prices on technical charts. It doesn't work like that in our minds. In our minds, it is finding a process which you can adhere to, which means that you can repeat that strategy year in and year out. It takes a huge amount of patience, it takes a huge amount of effort, and you have to deliver the goods over a long period of time. And for us, there are different ways of making money in the market. We accept that, we understand that. But our process is such that it reinforces that discipline. We are grounded in terms of knowing what businesses are worth, and we don't try and forecast, but we try and understand where markets are moving and then try and make sense of that, and then actually make investment decisions on the basis of that.
Yeah, I think a lot of people make the mistake of just wanting to invest in the best performing fund, but ideally what you should be doing is try to understand your objectives, your time frame, risk profile and so on, and then make the investment as appropriate. And to me, I think that's probably, if investors can remember that, it's probably the most important thing that they can use when making an investment decision.
Well, I think in these difficult economic times that we're currently experiencing, the main or key ingredient, I would say, is having a long-term focus when it comes to investing. Trying to ignore all the noise that there currently is in the market and really trusting managers that got a long-term philosophy and a tried and tested philosophy, and not only focusing on performance but looking at process and investment philosophy and seeing over a period of time if they've managed to be successful.
Well, that of course was a fun night. Fancy bumping into you in Cape Town, Roland.
Indeed.
And Quibby, you walked away, well, the company who employs you walked away with an award, so congratulations on that front.
Yeah, thanks very much. And there you can actually see, as a matter of fact, I think there was a whole range of these awards that were given out on the evening, and this is obviously the one for the flexible category that our firm walked away with for the evening. But coming back to some of those comments, it was actually surprising for me, Roland, I don't know if you agree with that, but surprising for me to see how long some of those comments were, because the question is actually quite simple. What's the most important thing when investing? Just quick snapshot. And sometimes these guys get involved in huge amounts of answers and everything.
Buy low, sell high. Look, last year wasn't an easy year, so it was a market that was very highly correlated, low volatility, and that made stock picking quite difficult. So you get periods where it's actually easier. In other words, a lot of fund managers can outperform, and then you get periods where only a few fund managers outperform.
Yeah, I mean, so and I got to say this. I mean, Clyde Rousseau's answer there. I mean, he's a veteran in the industry, but the thing that he says, and I mean, it's what we talk about on the show on a continuous basis, is process and philosophy, making sure that those things work over time, and then sticking to your guns. I mean, Colin, you've done lots of multi-manager research. I mean, how important are those things?
Yeah, very important. And I mean, when you look at all the speakers there, the one thing that you can take from all of them is that I think to succeed in this business, you need a firmly held belief system. You need that this is a way for investing that works for me. And what the belief system does is kind of it creates a conviction so that you can follow the system during thick and thin times, and remembering that there's no investment strategy that's going to work all the time. So I think that's very important, and that's what we got from a lot of the speakers.
Well, the first person speaking there talked about cut out the noise, but then he also said you need to think about what you don't know, because I think as you become an investment manager, you need to learn to have the discipline, not to think, well, okay, I'm just going to have one investment strategy for the rest of my life. You need to continually adapt to the new environment. And as you were saying last year, Roland, it was not a stock pickers market last year.
Yeah, I think the black swan, as it's known, the sort of things that come from behind and surprise you when you're stuck in your process that you're hoping will work through thick and thin. You've got to look behind you for the great white shark, which is, you know, the market that you didn't anticipate.
I mean, I think there were two individuals that kind of spoke about the noise and making sure to kind of shut that out of your mind. And I mean, if you look at the media machine that rolls on a continuous basis, and I mean, you just look at the impact that something like Twitter has on the business environment and on the market environment. It's absolutely phenomenal. Mm-hmm. I mean, and those things weren't available in 10 years ago. That is just noise that is coming through the market on a continuous basis, and being able to distill what is noise and what is actual news that you need to be acting on becomes very, very, very important.
And then, of course, you know, the point I made on the night, I mean, it was just after the Italian election when an actor, a comedian, had got 25% of the vote, and these kind of events really scare markets on a day-to-day basis, but fund managers have to adapt, have to look through all that noise and make investment decisions from a longer-term point of view.
Yeah, and I mean, not only that, but also making sure that they could be needs-based. So making sure, and on a continuous basis, thinking about what the investor requires, what they need, and making sure that portfolio construction somehow fits together with that over time. That becomes critically important.
Well, just some ideas to think about, of course, from the Morningstar Fund Awards, and that's it.